The market is holding steady for now, and we have to examine exactly why that is. Why are we holding at a support level that is dangerously on the edge of a collapse? So today we're going to look at exactly what's happening with the market, our favorite stocks within those positions. So Palantir, we do have some other ones, some SaaS companies, as well as Oracle and Salesforce. And then an urgent warning from Dan Ives on exactly what to do in these sectors right now so you guys can stay on top of it and hopefully making some money in the market. So with that being said, let's go ahead and jump into it and go ahead and watch the video.
Monetization, the use cases, is going to be software. And I think Palantir has been a great example of it. I think Oracle, obviously, that was a huge prove me moment that we saw, from them. I think you'll see it from Salesforce, ServiceNow, cybersecurity. Look, if there was a moment that you started to actually see enterprises go with true LLMs, that would be what I think that continues to be a fictional narrative. And we've talked about it. I think the Anthropic issue, it's a ghost trade. And I think that's why there's a bottoming of the software sector.
A lot of the companies that we see under pressure because of skepticism over AI, whether it's, I'm watching it with gaming companies,
Sure.
that everybody can be a sharp now because AI makes it possible to put forward the best predictions on parlays. You're seeing it in travel with online travel agencies. But what I hear from the companies is that they're harnessing and they're using AI to make what they offer to their customers better.
I think you nailed it. It comes down to like the LLMs, that's not going to be necessarily, the value is in the data, in the stacks. And that's why I think when it comes to software, the reason it's a ghost trade is that the monetization of software is just starting to happen now. I think Oracle, that was a huge proving moment for the sector. But I think what you see is that there's a lot of the bears that are coming out of hibernation mode, looking at software as ultimately, this is now the demise of it. I strongly disagree. I think Microsoft is probably one of the most disconnected stocks that I've seen relative to the sell-off.
What we're seeing, though, is that if you are an options trader, they are almost all going all in on the downside, especially in tech, especially for mega cap tech. How is that affecting your thesis when you're seeing options coming down to a mega crisis?
I think it just creates, obviously, volatility, but the opportunity for the bulls. Because in my view, tech will make all-time highs later this year. Are we going through a white knuckle moment? No doubt. But we've gone through it a year ago. If you go to DeepSeek, Liberation Day, and others. But if you look at the spending and the CapEx dollars, I think that ultimately is the yellow brick road because of the multiplier in CapEx that will be for software, infrastructure, second, third derivatives across tech.
What about higher gas prices, the way that affects consumer sentiment, and the way demand for consumer tech starts to have an impact?
Sure. I think it's the view, okay, does this conflict does it last a few weeks, few months, longer? In our view, like if it's contained, there's not that much of a negative impact.
What makes you think it would be contained?
Look, I think that's the question, is that I think right now the street, and from a tech perspective, we're focused on, is this going to change the view of CapEx dollars? Is it going to view the AI in terms of the use cases that are exploding? Right now, we're not seeing that. To some extent, I think what you're actually seeing is an acceleration in the AI trend. Look, that's why, to me, that's the huge debate right now, is that the bears are basically saying this is going to disrupt the AI trend, is going to disrupt tech. We disagree, and that's why this is
Wow. Okay, so a lot to unpack there from Dan Ives, and there's a few main things he pointed out. First, CapEx, obviously the conflict in Iran, and also there is the Google, so looking at Microsoft, and then the options traders, so a lot of shorts positions on options. So we're going to discuss all that. So let's start out with exactly what is happening with the CapEx market. If you don't already know, there's a lot of these companies, a lot of the big ones, Mag 7s, that are investing so much in infrastructure for AI, like data centers, like hundreds and hundreds of millions of dollars, tons of money. And the goal is to essentially win the AI race, essentially. That's what it's about. And so when we're talking about CapEx, in the war with Iran, if this affects gasoline prices and people have less money to spend, that would affect those companies. Now, just like Dan Ives said, if this is contained and it's kept under lock and key where it's only affecting, 20% of the world's oil, maybe that's fine. Maybe we can continue as normal and this won't affect the market. And that's kind of what we're seeing a lot of the levels here. Let me pull up the S&P here for you guys. You can see like people are waiting to see what is going to happen with the markets here. If we look at the 1-year chart, you can see a very, very solid support level here at the 6,700 mark, which are basically right there. We're right there. Now we've gone through other situations. Out here in April, this was Liberation Day. It's gone up, obviously, to more the 6,700 range. But I think we're sitting at a really, really solid support level. We're seeing a lot of consolidation. And with the CapEx spend and the gasoline prices, these are baked into future expectations of the market. And so that was a big point that Dan Ives made. The other point was Anthropic and how this is affecting different SaaS companies. So Oracle as well as Salesforce. So let's go ahead and take a peek at Oracle. You can see here, we actually did some trades. I did some trades in our group. I posted them. But you're able to see with Oracle over the past year, it's gotten a little bit beat down. AI, there's a lot of scare in that. But a big piece with Anthropic is, would Anthropic replace all these jobs that are using these SaaS companies? And just to give you a very just simple example, if there's a team of 10 people in a company that uses SaaS, let's say it uses services from Oracle, okay? And let's say with the introduction of all these AI softwares that can replace these people's jobs, let's say that team goes from 10 members to 5. So instead of 10 people needing the software, now only 5 do. Now, if we multiply this times thousands of companies in the US and across the world, this is what people were scared about with the SaaS companies, is how much it's actually going to affect the revenue. Ultimately, what Dan Ives was saying was, let's understand that AI, it's not going to replace as many jobs as we think yet, at least. This is something where it's actually making the jobs that people do better. And he was using the example of travel industry, as well as there's another one. I forget exactly what he was saying. With these companies like Oracle, that's why we're seeing, if we look at the month chart, a little bit of a rebound, a good swing trading opportunity to actually make some money on a company like this, potentially get some shares at a cheaper price. Now, if we get to Salesforce, let's look at this over here. Okay, so it's 198.34 on the day. As you can see, a little bit of a run up today, so that's good. 5 days, pretty much hanging at the support level of 197. And then over the year, if we go over the year, you can see it's been bleeding a little bit, holding a heavy support line here at the 250s range, but then you can see it dropped. And this was about the time with Anthropic, which is when we saw a lot of fear. And so Dan Ives predicts that this is more of a bottoming of those sectors and those companies, and we're going to see a bit of... Now, when there comes to be war, there's one company to mind that comes to my mind. It's Palantir makes money even if there's no wars, just to be clear, guys. But Palantir does especially well when there are wars, because this is what they do. They sell massive contracts to the government, especially the US government. They're very deglobalized. They're very national. But they do help out some governments, though, around the world, but they're primarily contracted with the government, the US government. Now, they also are essentially a landlord, which is an important piece to remember with their revenue. So if we look at the 1-month chart, they're going up pretty good. They're recovering pretty good. The 6-month chart, as you can see, they're down from their peaks. Let me just pull up here the year chart. They're down the peaks of around, in this ballpark here, around the 204, 209 area. I mean, come on. This is a fantastic company. So if you haven't already, these 3 companies, do your own due diligence on them, and make sure to really look at if this is something you want to hold long-term in your portfolio. When fear is highest, that's when the best buying opportunities are. And if we look at the fear and greed index today, so it's at 23, so it's actually gone up, which is crazy. The VIX has come down slightly. It was at 27 yesterday. 27.19. It's come down slightly, so we're going back down to normal levels as long as nothing crazy happens, but the fear is still super high. So if you're looking at getting these companies, that is a fantastic buying opportunity to DCA into those. Now, lastly, let's discuss options and the shorting of these stocks. When it comes to options, I think it's a fantastic time to start getting into some leaps, buying some leaps. That is a long call. So getting in a company, let's say Palantir, you're estimating that Palantir over the next year is going to go up in price. That's a very realistic assumption. And based on what we're seeing with the company, I mean, the last Q4 earnings in 2025 were just fantastic. Okay. So if you believe that this company is going to keep getting more revenue, if you believe they're going to keep doing great, get more contracts, and just establish a bigger footprint, which we've looked at in the S&P 500, Palantir is the most currently undervalued in terms of, like, Mag 7s have really good valuations. If you put them all together, Palantir has a lot of growth perception. Okay. So don't let that fool you with the stock price. Now, when it comes to selling puts, let's say you were to sell puts on Palantir. So let's head over to Palantir. Okay. So you can see some good levels here. It's pretty realistic to assume that it'll maybe go down a little bit, Palantir, and then maybe come up and start a little run, maybe test and then come down. So selling puts, let me just see here, more at so this is 154, 152s. So I would say 148, 149 range would be good. Now, if you get assigned the shares, it's not the worst thing, but I wouldn't necessarily try to get assigned those shares if you want to keep trading and earning some premium. The main reason, I think that's what Dan Ives was explaining, was, listen, options premiums are insanely high right now. Even on a company like Palantir, it's just insane. And so, yes, shorting the stock is going to earn you quite a bit. But with that being said, we might not see a shorting like a lot of people are expecting. It might just be consolidation, then we might slowly start going up. And then as interest rates are hopefully going to be cut very soon, it might just keep going up in anticipation for that, baking that into the market. So with puts, I'd be careful at this time. Maybe selling puts around like 148, 149, maybe 147 range. I would do them out around 30 days from expiration, collect that premium. And then as long as you don't get assigned, then yeah, you can just keep running puts on those. If you do get assigned, then you can obviously just do the wheel strategy. Another one would be for Salesforce here. So you can see we have some pretty solid support level here. I think it's realistic for it to maybe do another little dip and then test the support range again. And so for this company, let's see what it went down of lows of 175, basically 174.5. So, I mean, what I could see as a potentially good put would be somewhere around the 193 range, 192, and then out a month for that put. So those are kind of some trade suggestions for you guys. If you did enjoy this video, make sure to click the like button, subscribe. I really want you guys to stay up to date on the market and exactly what's happening. And I'm working very hard in the background. So if you enjoy this content, it is my biggest motivation if you just subscribe and click the like. But with that being said, we'll see you guys next time. Have a good rest of your day. Bye now.